With the addition of the profit and loss account, you can now see every pipe starts and ends in a tank. The diagram is completely joined up. Additionally, on day 0, so the business's creation, every tank is empty, every balance is 0. Down the right hand side you can see the amounts of assets, liabilities and equity. So if we click start and let's set revenue to 20k per day, for example. Receivables days is 0, so this is just operating on a cash basis, a business selling products. And in this simple case, the amount of money in the business's bank account, the amount of cash it has, is matched by the amount of profit that is generated, as you can tell over here. Let's introduce some receivables days. So now customers have 19 days credit. And in this scenario now, the business's profit has been unaffected by that change, but its cash receipts have temporarily stopped because customers are now waiting 19 days before paying. But we see that receivables balance is building up. So the amount of blue still matches the amount of red, and you can verify that using the financial statements. The same concept holds true if costs have been introduced. So now, let's say £17,000 per day of costs and payables days of 14 days, so 14 days before a business is having to pay its employees and suppliers. So now we see, in addition to the red equity balance, we see a red liability building up in the payables tank. But because of double entry bookkeeping, the amount of blue always matches the amount of red. The amount of assets is always matched by the amount of equity and liabilities.